I'm Johnny Fernandez, anchor at FinTech TV, and you're watching Taking Stock.
So what? 2 minutes ago into the closing bell down here on the trading floor of the one, the only, the truly iconic New York Stock Exchange. Speaking of iconic, look who joins me now for a new edition of Tuckman Tuesday, a segment I just made up, but why not? What a day.
Tucky's Trade Talk.
Tucky's Trade Talk. Yeah. We had tracked the semiconductor sell-off happening not just in the U.S. but around the world that defined this morning's tape. Nice reversal for the S&P. What did you see in your book today, Peter?
You know what? I saw that it was very sector generated. The whole sell-off and the rally. Okay, it was sort of super important to note that. The bottom line was look at the Dow, up 600. Is that where we are right around now? So it's really it was broken down. The S&P obviously had a lot of trouble earlier in the day, and the Dow, though, they're looking at buying industrials. That's where, right, Boeing, a number of other stocks. So there's value there. It's once again this rotation mode, right? When there's a lot of indecisiveness about what's happening globally, they go down to the brass tacks. If it's not earnings, it's going to be rotational. We're selling out the things that are either underperforming or overperforming, and then buying value. And that's where they're seeing value today in the industrials on the Dow. So.
Yeah, and of course, and this sets the stage for a really consequential couple days. We got mega cap earnings. We got a Fed decision on interest rates, which suddenly might be a lot more uncertain.
That's why today is fundamentally it's a good day.
It's a lead into a big one tomorrow. Tuckman, thank you for being here as always, my friend. Take good care. Third Coast here to do the close. Time now for the closing bell. More Taking Stock after this. There you go. Hey guys, show the crowd. That's more fun than anything I'm going to say. That's so nice. And that makes my job much easier on this Tuesday afternoon. Your final tail of the tape from the New York Stock Exchange. The S&P 500 in positive territory against all odds, 0.2%. The Dow up a full percent. Hello, the New York Stock Exchange composite. But looks like 0.5%, and the small caps trying to make up their mind throughout the intraday session, finishing up about 0.2%. Semiconductors getting rocked on the day as chips sold off. Both in places like South Korea as well as here stateside throughout the day today. Micron, AMD, Marvell, all down in the red, more than 7%. The SMH Semiconductor ETF also down more than 3%. Staples, healthcare materials, we did have a fair bit of winners in the S&P 500, and they topped the list. Your laggards include tech stocks, energy stocks, as well as industrials. To the Dow we go. Some more defensive names outperforming. It is earnings season after all, so expect the unexpected. Sherwin-Williams, Coca-Cola, Boeing, your Dow winners, your Dow laggards on the day. Your Dow laggards are actually usually the best names in the Dow year to date. Caterpillar, Goldman Sachs, Chevron. Caterpillar now down 22% since the start of July. The Mag 7 tech stocks are mixed into the closing auction. Shares of Alphabet up about 2%. Shares of Tesla down 1%. SpaceX hitting a fresh all-time low earlier today of 107, but did rebound nicely north of 115 into the closing bell. Let's bring in the great Eric Criscolo, market strategist here at the New York Stock Exchange. Wow, man. So, I mean, this is a wild day.
First of all, that was the most energetic bell I've seen in a long time. That was awesome.
That makes the show
a
lot easier for us to do this.
It does.
They were awesome. The crowd, you all were awesome. Thank you all for being here. Let me get your take on the tech unwind, the momentum unwind. We came into today's session thinking one thing, and the afternoon kind of showed us something here the last couple hours.
Yeah, so like you said, I mean, Asia was just absolutely rocked for their tech names. So we started the day thinking, oh man, what are we going to see for the U.S. tech side of things? And like you said, most of the names, most of the indexes, the tech focus indexes were definitely down. They were hit hard, but they finished off their lows, so they kind of bounced a little bit. NVIDIA finish in the green. It was lower to start the day, finished in the green. So it wasn't a great day by any stretch of the imagination, but tech showed a little bounce. Buyers kind of came in to buy those lows, buy those dips. So you found some support levels there, and that kind of helped the S&P, kind of stabilize, find its bid, move higher into the close. Notably, the S&P equal weight hit an all-time high.
Yeah.
So
I was going to ask you, what does that tell that it's not just the market cap weighted side of things, but it's also the equal weights. In a day like yesterday, regular XLK could be down the rate, it could be down the red, but it's equal weight tech that's actually in the green. It tells two different stories.
You heard the consternation for a long time about, 7, 10, 20 names carrying the index. Oh my God, what's going to happen when these things, turn lower? Well, that's happening, and you kind of see this violent, huge rotation with this overextended, AI, tech, memory trade. That's all unwinding right now, but it's kind of going into these other areas that have kind of lagged behind the markets. We've been talking about healthcare for a while. Financials are seeing some bounce. Software is seeing some bounce. Financial software is seeing a big bounce.
There you go.
Exchanges. So all these names that have been like kind of left for dead or just ignored or even just sold down, they're kind of seeing a bid as this money comes out of tech, rotates into these other areas.
Eric, tomorrow is the type of day that makes us very grateful for all the caffeine that we have here at the New York Stock Exchange. We got a Fed decision on interest rates at 2 o'clock, a Kevin Warsh press conference at 2:30, and then after the bell, we start to hear from more of the mega cap Mag 7 names. We get Microsoft and Meta. Take your pick. Where do you want to start in terms of the top things you'll wake up tomorrow morning and say, here's what I most am looking at for Wednesday's tape?
I mean, how could you not say Kevin Warsh's second FOMC meeting, right? I mean, come on. It's going to be interesting. Rates have moved a little lower the past few days going into this meeting. Obviously, oil's come down as well, so that's helped. But the odds of a Fed rate hike have come in a little bit. It was about 30 to 40% coming into today. Now it's about 20 to 30% last time I checked.
Just to clarify, of a hike.
Yes, of a hike, yes.
I mean, look how quickly that conversation
Exactly,
shifted.
exactly. The lower CPI prints a couple of weeks ago, that has certainly helped at least take the push for a hike off the table or lower the odds or the expectations for that. But we've been saying for a while that Warsh has a lot of things he wants to do. He has this task force, his task forces that he just manned or womaned or whatever you want to say. So those are going to start meeting and coming up with their recommendations. It would be a little surprising if they actually do anything before these findings come out. I'm not saying they can't do it, but it would be a little surprising if they do hike or cut or whatever, before all these findings come out. So my guess is that they keep the ship steady, they don't do anything. What's really going to be interesting is how much Warsh actually says, because he's been in favor of not saying much at all. Forward guidance, kind of not liking it. Dot plots, and he doesn't give his own dot in the dot plot. So it might be an extremely boring FOMC meeting, if he doesn't do anything. So we'll have to see.
Yeah, as opposed to the usual fireworks that we are used to for FOMC.
Yes.
At least in our world, we're nerds for this stuff. Here, the average person's out there is like, are they ever very exciting?
Right.
To us, they very much are.
Exactly.
Easy E, I'm out of time. But dude, let's do this again later on in the week.
Absolutely.
Eric Criscolo, market strategist here at the big board. Robbie will grab your mic. Todd, you and I will head this way. Here are a few of the top analyst calls that moved the tape this morning here on Wall Street you may have missed. First up, Bank of America downgrading ExxonMobil to neutral, saying it sees limited upside potential for the stock. They did lift the price target, however, to 158. RBC, meanwhile, reiterating Tesla and SpaceX both get an outperform rating, lowering the price target on Tesla specifically from 500 to 480, but still sticking with both stocks. Finally, Wells Fargo downgrading Levi's to equal weight, seeing less upside to the stock than they previously anticipated. Shares are in the green in 2026, 22% year to date. It is in the middle of earnings season. We're going to look at two New York Stock Exchange listed companies that gave us a lot, and investors giving them very different reactions. Todd, let's start with a look at UPS, down more than 6.5%, a huge gap down despite reporting an earnings beat and lifting their full year guidance. Investors kind of looking past the headline numbers to some more discouraging trends under the surface. Things like overhaul costs and shrinking profit margins down on the day, still up about 5 to 6% year to date. And how about Coca-Cola, up 5% exactly on the day, a stock that IPO'd here at the New York Stock Exchange all the way back in September 1919, today hitting an all-time high. That's incredible, reporting a double beat on earnings and a big gap up this morning Coca-Cola, now the 5th best performer in the Dow in 2026. At the 2026 Aspen Ideas Festival, the New York Stock Exchange's very own Kristen Scholler sat down with CEO Martin Whitaker of Just Capital. They discussed how to responsibly deploy artificial intelligence, among many other topics as well. Take a look.
Well, I was invited to speak on Just Capital's data and our views on the American dream and whether workers matter. And the session was this morning, and it was well attended, and I thought the conversation was very rich. But it's been a great experience for the last few days.
What is your view?
Well, workers do matter. If you look at companies that treat workers well and have a high level of worker engagement and productivity, they tend to do better in the market. Our data has shown that for better part of a decade now. But I think with the real context of the question is obviously around AI, and does work matter? Do the workers that are going to be affected most by AI? And so we presented a lot of data on how companies are investing in workforce AI training, how investors view that, what best practices look like for companies that are really trying to lead on AI investing. I think what's interesting to me is that companies are really beginning to lean in. It's an area where business leadership, investors, and the American people all agree we need more companies, focusing on upskilling and reskilling the American worker around AI.
What does responsible corporate deployment of AI look like?
Well, if you ask the public, which is where we take our cues from, it's really about it. How do I produce the business results that I need, whilst also creating value for my stakeholders? So responsible AI, which is a term that we define really through the lens of the stakeholder model. So how am I embracing AI in a way that listens to and creates value for my workforce, my customers, my investors, of course, the planet, where in this beautiful environment you can't ignore, and for the communities where I operate. And we think that companies that do a great job of balancing that and navigating all of those expectations will be more successful.
What does the data show?
Well, the historical data shows that indeed that's the case. Companies that create more value for their stakeholders tend to do better in the market. We've seen that by sector. We've seen that across the Russell 1000 companies that we track and have been tracking for a decade. Our indices have outperformed the benchmarks, but I'll say this, Kristen, I think it's not an easy or a simple formula. This is about companies really constantly seeking, where can I create mutual value for my business and value for society. I think the mindset is that it's a zero-sum game, that those two things are antithetical. Our data has not supported that. And we think that when businesses can manage to align their strategies and their successes with the interests of those different stakeholders as well, you tend to get a win-win. So again, the data would suggest that that's the case, but it's really company by company.
How does this fit into the overall mission of Just Capital?
Well, it's essential. It really is the mission. We are all about trying to incentivize business to lean in on some of the country's more intractable challenges. And the only way that companies will do that and company leaders will do that is if it's in their best interest to do so. So it's not charity. This is about doing what's right by business over the long term in particular. So the mission of Just Capital at its highest order is to advance capitalism in a way that it works for more people. And the way we go about doing that is by asking people, what does that mean to you? So we've done surveys now all around the country. We do them really on an ongoing basis. We're surveying now around AI and stakeholder attitudes towards that. And we're really the interlocutor for those different stakeholders. So our mission is, we want capitalism to work better for more people. We want the results of that. We want more people to share in the benefits of that. And we think when that happens, then good things will happen, both for businesses and for the country.
Welcome back to the show. Joining us now down here on the trading floor of the New York Stock Exchange, say hello to Ryan Lovar, Chief Legal Officer and Head of Business and Legal Affairs for Digital Assets at WisdomTree. My man, nice to see you. Thank you for being here.
Nice to see you. Thanks for having me.
It has been nonstop drama this year, trying to figure out the latest over the Clarity Act. I think we know at this point how important this really is to the overall industry. What remains unclear is whether or not it would pass, what the path forward actually looks like. For people who hear about this a little bit day to day, give us the latest as you understand it and where we stand a few months out from the midterms.
Yeah, so just a little bit of history. About a year ago, Congress passed the Genius Act, which was stablecoin-focused legislation. Right before that, so a little over a year ago, the House actually passed the Clarity Act. So we've been, working through the legislative process on the Senate side for about a year now. About a week ago, the Senate released a reconciled version between the Bank and Agricultural Committees, over 600 pages of text. But really, it focuses on broad market structure changes, bringing market structure definitions to types of digital assets, clarity on who would oversee those between the SEC and the CFTC, and also broader consumer protection, anti-money laundering, and different provisions. So a lot of negotiation behind the scenes. Really the hopeful path forward is that it'll go to vote before this August recess in a couple weeks. What we're hearing as late as today is that, in fact, there's a lot going on in terms of different legislative priorities. This may take a back seat, but it remains to be seen in the next couple weeks. I mean, we'll certainly have daily updates as to whether or not, we see a passage. One of the major holdups right now is an ethics provision. It was added a week ago to give, greater, if you will, teeth around kind of, what can be done, holding federal legislators, including the president, not allowing them to issue digital assets, if you will, but certainly on the Dem side, they feel that there need to be stronger provisions, and so there's still some air there that needs to be tightened and closed before it passes.
I know some critics of the White House have said maybe that's a paper tiger provision. We don't actually know how enforceable it actually is. But to the point about Democrats versus Republicans, when people hear about political theater on Capitol Hill, they say, well, this has to be a partisan issue, because it's very rarely that we actually could use the word bipartisan to describe something. But for the most part, this is something that's pretty evenly balanced between both parties, right? It's not necessarily a GOP versus a Democrat issue, especially ahead of the midterms. Is that right?
Yeah, that's exactly right. Yeah. So if you think of 600 pages of text, the variety of issues, you have bipartisan support nearly uniformly across the board. It's really these last couple of issues where they're trying to come to the middle and gain a middle ground. But a lot of work's gone into really ensuring that can be bipartisan. And coming out of the House, there was bipartisan support. Democratic senators have expressed support, although concern over these lingering provisions, certainly.
How do you think or hope the Clarity Act may accelerate institutional adoption about something else we've been talking about all year? General progress on tokenization?
Yeah, so WisdomTree, we're very focused on tokenization. The largest lineup of SEC registered funds available in the U.S. And the way to think about it is the SEC under this new administration in the last 15 months has really made tremendous progress on different interpretive releases, different guidance, different rulemaking. But if you think about broad market structure legislation, it really needs to be embedded in rules that can be long lasting. And so that's what the focus is, getting clarity, having these long-lasting rules across the variety of the spectrum to really give players, institutions that want to enter the space, just the comfort that they are bound by rules. Those rules will be long-lasting if they're going to build here in America particularly, and if they're going to invest capital to do it.
Ryan Lovar at WisdomTree. Thanks for the context, helping us better understand what's at stake here and where we are as progress continues to get made on a really important piece of legislation in D.C. Ryan, thank you.
Great, thank you.
Don't go away, a lot more Taking Stock coming up right after this. Welcome back to the show. You're watching Taking Stock live from the trading floor of the big board. Join us now, Anthony Denier, Group President and U.S. CEO at Webull. Nice to see you here today. Thanks for taking the time.
Thank you, JD.
We're going to talk all about paper trading, something we may be more familiar with in the industry. I don't know how much our viewers really know about it. What is it, and what more can be built and tested in this type of environment?
So paper trading is a fancy way of saying simulated trading. Right? Allowing people to try out a product, kind of like test driving a car. And it's one of those things, like you can do a lot of things by reading books or going online and watching influencers, but there's no substitute for experience. Paper trading allows retail investors to use our platform and to learn, to grow, to experience the product across all product forms: equities, options, fixed income, crypto, event markets, futures. Most importantly, APIs, and now a third-party agentic MCP servers.
So talk to me more about the agentic AI component about this, how you see this fitting in with your general thesis about what you think the future of investing really looks like for tomorrow.
Sure. AI is changing how retail is going to engage with their retail platform. Natural language, the ability for feedback to come directly to you, making everyone more intelligent about their trades, and utilizing paper trading allows customers to not only integrate new AI strategies, but do it without risking their own capital. Therefore getting used to the new process, the new interfaces, without having to risk their own finances.
Talk to me about your AI investing co-pilot. It's called Vega. Do you view this as a smarter research assistant, or do you see it becoming much more in the future of an actual investing agent itself?
So right now, it's a trading assistant. It combines news, it combines research, and basically drinking from a fire hose. That is the markets. There's so much information coming at you, it really dilutes it down into something digestible. That's today. Tomorrow, we're going to see Vega interacting directly with the customers to form portfolios, to actually allocate positions in and out of portfolios, mitigating risk, taking advantage of things like tax loss harvesting. It is the future of our business, and it's really, really exciting.
What does the feedback look like from your users? How important is it to receive that feedback? And I'd imagine a big part of the calculus is for them to learn without the financial risk directly attached to the learning process.
So the interactions we're having with our Vega AI trading assistant have gone through the roof, right? The amount of interactions we're getting, our active traders on average, more than 60% of the time they execute a trade, they're interacting with Vega before they execute that trade. I think paper trading is going to give the ability for people to get more comfortable with using our Vega products, and therefore making them more comfortable with using this new technology.
Anthony Denier, Group President, U.S. CEO at Webull, the new AI investing co-pilot Vega. Congratulations, it's really exciting stuff to make a more informed trader, a more informed investor. Appreciate you being on the show today.
Thank you, that is what we do. Thank you, JD.
All right, don't go away, folks. A lot more Taking Stock coming up live from the one and only New York Stock Exchange right after this. Time now for a few headlines in the world of fintech, crypto, and artificial intelligence you need to know for your Tuesday afternoon. First up at this hour, the crypto majors are in mixed territory. Solana, the hardest hit, down more than 2%. Bitcoin trading right around 63,865. Next up, Anthropic CEO Dario Amodei rejecting calls to ban open AI models, but urging mandatory safety testing for all advanced AI systems as Capitol Hill weighs new AI regulations. And finally, Google's AI-generated search summaries now appearing in more than 40% of all searches, underscoring the ways artificial intelligence is rapidly changing the way people find information online. Always double check your AI large language model responses. And now Scarlett Sieber from Money 2020 is back with a whole new edition of Jargon Translator. That's, of course, where she puts complicated, wonky finance terminology into language that anyone can understand. Take a look.
I'm Scarlett Sieber from Money 2020, and this is Jargon Translator. Today's term is net settlement. Net settlement is a way of reducing how much money actually has to move. Instead of settling every transaction individually, systems add up what participants owe each other and settle only the net difference. It's efficient, it saves liquidity, it reduces operational friction. But it also concentrates that risk, because when transactions are netted, obligations become interconnected. If one participant fails, the whole net can unravel. That is why net settlement systems require strong controls, depend heavily on trust, and can transmit stress quickly when something breaks. Let's fast forward to today. Net settlement, it's everywhere. In payments, clearinghouses, and financial markets. It's one of the reasons systems can fail. But it also means failures are rarely isolated. Net settlement trades simplicity for interdependence. And understanding that trade-off explains why clearing and settlement are always central to crisis management. That is your Jargon Translated. If there's a term that you want unpacked before it becomes relevant again, you know where to put it. In the meantime, back over to you.
Tomorrow, Wednesday morning here on Wall Street, we will get the latest quarterly results from SoFi as well as Procter & Gamble. In the afternoon, all eyes on Kevin Warsh and the FOMC, the latest decision on short-term interest rates, plus Chairman Warsh's can't-miss press conference tomorrow at 2:30. And then after the close, the latest results. This is what it's all about. Microsoft, Meta, ARM Holdings, Robinhood, Qualcomm, and many others. Thanks for watching today's edition of Taking Stock. Have a great Tuesday night. We'll see you again tomorrow.